to the Floor Show. Joining me now, Natixis Investment Managers lead portfolio strategist, Jack Janasiewicz. Jack, last week, 3 separate reports on employment, JOLTS, ADP, and August jobs report showed job creation fading, sputtering, whatever you want to say about it. The Labor Department's August report totally whiffed. 22,000 jobs were added compared to the expectation of 75,000. Tell investors how you see it as an investment backdrop right now.
And it's a tug of war right now between that inflation backdrop and the potential for a slowing labor market. And it certainly feels like that narrative is shifting more in favor of the labor risks that we're seeing in the marketplace. And I think as that shifts, that probably makes the idea that the Fed can actually start to cut rates probably even 3 times between now and the end of the year more likely. And that rate cut backdrop thing is what's putting the floor under the market right now.
You put it as this: the economy continues to hold up and it's innocent until proven guilty. I like that. But, you know, these things tend to turn quickly. I'm not saying they will. But that said, you also feel that any drop is a buying opportunity. Get in on the dips. What gives you that confidence as we continue to see a bull market that has stretched longer and longer?
And I think that is the key risk going forward here, right? We tend to often see when the labor market starts to roll over, it doesn't really roll over slow. It tends to actually accelerate to the downside. And I think if we do start to see that sort of picking up to the downside in terms of job losses, I think that changes the reaction function for the Fed and puts that a little bit more aggressive on that front side. So again, it all comes back to that narrative between that tug of war. And I think at this point, we're still looking at that jobs market being really the balance of risks going forward for the Fed. And that probably puts them into that dovish camp, which really should support the market. Hence why we're buyers at any pullback in here. Okay,
so as you buy on a pullback, you still believe in AI. Artificial intelligence has had just an incredible run. Obviously, today, the NASDAQ, which has a ton of AI names, doing very nicely. We're at a record at the moment, folks. So give me your number one reason as to why you're still going into AI after so many of these names have run up.
And again, I think we need to see that narrative change again. We're just not seeing any signs of that. You know, when you go through and listen to all the commentary that we got out from the hyperscalers during second quarter earnings calls, it was all systems go, right? That spend was still pretty aggressive. We'll hear from, I think, Oracle coming up over the next couple of days. That'll probably look to reconfirm that backdrop. But until we start to see signs that that CapEx spend is beginning to slow, I think you still have to be in that AI trade because that's going to be a pretty significant contributor. That's what we saw for second quarter GDP. You know, that bullishness for that CapEx spend certainly outclips the impact for consumption. And until we sort of see any signs of that slowing, I think you still have to stay with that.
I'm so glad you brought up the hyperscalers. And for those of you who don't know, that's sort of the term of the biggest spenders, the Microsofts, the Metas, the Googles of the world, who are just building out these data centers in a big way. There was this, I don't know if you heard about this, but last week when a lot of the tech bros and the tech names were at the White House with President Trump for a dinner, Mark Zuckerberg of Meta was caught on a hot mic, and it made some people question as to whether some of these huge numbers of how much they will spend might be just kind of pulled out of the air. Let's listen first to what he said while the cameras were rolling, and then what was caught on a hot mic, and then I'll get your thought on this.
How much are you spending, would you say, over the next few years?
Oh, gosh. I mean, I think it's probably going to be something like, I don't know, at least $600 billion through 28 in the U.S. Yeah.
It's a lot.
No, it's significant. Sorry, I wasn't ready to do for announcement.
He said I wasn't sure what number you wanted to go with.
So he said later, I wasn't sure what number you wanted to go with. Since then, Mark Zuckerberg has come out and said, oh, I meant something different. What I was trying to say was I didn't know if you wanted me to go with 2026 or 2027, 2028. But it made people question, are these numbers just pulled out of the air? And that's when you get a little frothy, no?
Yeah, I think there is some concern that, you know, these numbers are pretty large. I think, you know, when you look at the aggregate numbers that we've been seeing, certainly when you throw out a number that's 600 billion, I think you have to take that with a significant grain of salt, just because those are, Meta would be in and of itself exceeding what the hyperscalers in aggregate would be putting together there. So, you know, from that perspective, certainly I think a little bit of hyperbole. But, you know, again, the bottom line here is that these guys are still spending a significant amount of money, and that's what's key going forward. That's not about to slow down anytime soon.
You like some of the communications, the telecom, beyond the AI picture. We got a big story when it comes to telecom, and that would be EchoStar selling billions of dollars of its spectrum. The news today was they'll sell it to SpaceX. You see some of the competitors all moving lower at the moment, including AT&T, Verizon, T-Mobile. Listen, I don't know why AT&T is moving lower. AT&T just got their hands on $23 billion of EchoStar's spectrum licenses, but none of the cell phones or any of this works without the spectrum, correct?
Yeah, I mean, a little bit outside of my purview here, but I think that's partly the case that you're talking to right now.
Yeah, because then when you say that you like certain names in the space, what is the driving focus for you?
Yeah, and it's going to be really the next iteration of where that AI spend moves to, right? We certainly have seen all the money being spent on the data center build-outs, but you're now going to move, I think, closer to the agentic AI, like where we're actually going to see use cases for us every day. And so again, we're all focused on the data center build-outs, but I think that it's going to see a cycle here. That money is going to shift, that CapEx is going to shift to the next iteration. And that's sort of where the rubber meets the road. How are we going to benefit that as consumers? How are companies going to benefit from that? That's where I think you're going to start to see some of that money flow shift. And that's probably the next big iteration of where the AI trade is going to be going in the near future here.
Really quickly, how closely will you be watching Oracle's earnings, which come out after the bell tomorrow? They are a big AI name, right?
Yeah, and we just talked about that, right? We want more confirmation that AI CapEx spend is still intact. And Oracle was a big one the last time they came around with their comments. And so we'll see if they can reaffirm that number going forward, and that trend is still intact.
Good to see you, Jack. Thank you so much for joining us.
Thanks for having me back.
QuantumScape shares taking a